Well, some of the big news that made headlines this week under the microscope with Anthony DePaul from Atlantic Pacific Securities live in our Sydney CBD studio. And you can understand, Anthony, some caution, some fence sitting coming ahead of non-farms. That said, ADP, the private survey, was a beat. Do you kind of give that sort of the pass-through to tonight's release and have some optimism it'll be a beat?
Good question, Carson. I don't think there's much correlation between last night's private sector employment data and tonight's non-farm payrolls. And we only have to look 1 month ago when we saw in the private employment data over 150,000 jobs added, and yet when it came to the non-farm payrolls, there was only about 38,000 jobs added. So whilst the market is looking at it as a leading indicator, history would suggest that it's not an exact correlation.
What about the ISM and the jobs component there that we were seeing earlier?
Yeah, they all as indicators, they all stack up and increase the chances of a rebound. What we're looking for tonight though with the non-farm payrolls is it a statistical anomaly or do we confirm a downwards trend that we've seen since February and March? I would suggest that if it rebounds, then it certainly is a statistical exception. If it doesn't, then it certainly confirms a worrying trend, and that's going to have an impact on our markets because the foreign currency is linked to that. We saw last month when we had the significant miss in that non-farm payroll data, the US dollar was weaker immediately, and that was a massive boost to our commodity sector. The next session, Newcrest Mining was up 10% in one session. So the market is going to be watching very closely what happens tonight.
What does it do to the path of least resistance for the greenback? Do you eyes the prospect of an unwind in some of those long positions?
Yeah, potentially. So we've got the market has a 10 to 13% probability of a rate hike increase in December for the US. So we really need to see a significant rebound in tonight's employment data for those expectations to change. If we don't see a significant rebound, then they're probably going to wait to the next read before they start factoring it into their significant long positions.
Are we looking at the right market though? Because what about the devaluation we're witnessing in the yuan right now, and a number of those shorts that are sort of having a field day while everyone's being distracted by non-farms and Brexit and the EU connection?
Well, Asia's currency is very difficult to predict. We know, Japan can be considered a safe haven, and Japan's worrying about the strength of their currency. They want to make it weaker to boost their exports. But I would say that for Australia's market, it's the non-farm payrolls tonight that's going to be the biggest direct impact on our market.
Are you surprised at that sort of default safe haven status of Japan? I mean, you looked at the services PMI for June and then the June quarter, very weak conditions. What have they got to crow about?
Well, Japan has its own problems, and they certainly do want to increase exports. And we saw with the Brexit issues, Japan coming out saying that they're not happy with the strength of their currency and they want to do something about it. And that actually supported the market post-Brexit because of potentially more stimulus coming in. At the same time, Bank of England suggested that they'll step in potentially in August and cut rates there after being stable since 2009. And China came to the party as well and said, they're not going to let these global issues affect their economy, and they're willing to step in. And it seems to be the flavour of the month, how currency and interest rates affects global markets.
And we've got our own jobs jolt to, hope for it maybe for next week, although in fairness the unemployment rate is tipped to rise ever so slightly. What do you make of this? We've got reports on Holden and confirmation of job cuts there. Telstra even, news of potential relocation of staff to, or at least operations to the Philippines now. Further march into that market. What will that overall do to sentiment?
Well, in terms of sentiment, I think the consumer sentiment index and the business confidence index that's released, the business confidence released on a monthly basis, is very important as a leading indicator, as well as retail sales to see, what impact that's going to have on domestic jobs. But the economy from an employment front, the Australian economy has done considerably well, given that we've had the pullback in the mining boom. We have been saved somewhat by the strong East Coast property and construction performance, especially with a lot of those miners that have adaptable skills going to East Coast property and construction. That has saved us, and we really need to see continued support in that area of the economy so that we don't have a hard landing, especially if commodities continue to go south.
It was interesting this week. We had sort of one of the mainstays of Australian wealth, and that is housing. Costa Tasman, head of financial stability at the RBNZ, was serving up some warnings on macro-prudential risks. But then there were no new tools announced, and so the New Zealand dollar jumped as a result. It was kind of damning with faint praise, the whole outlook on things. You've got Lucy Ellis, kind of the equivalent for the RBA next week, serving up 2 speeches. Do you imagine that she might echo her New Zealand counterpart? And I can see you maybe just had an issue there with part of my question hearing it. I mean, Lucy Ellis talking next week. Do you believe that housing and the risks of an overheat story could be at play? Thoughts about that?
Sorry, Carsten, I left you there. Technology is a wonderful thing when it works.
It is. Thoughts on Lucy Ellis, Head of Financial Stability, talking next week down under. Will she echo what RBNZ's Head of Financial Stability said this week? What are your thoughts?
Well, the New Zealand economy, they obviously after the earthquakes, etc., they need support by the central bank in order to continue their delicate recovery. But in terms of what it means for Australia, I would prefer to be focusing on tonight's employment data, because I think that's going to be the biggest impact, especially next week and especially for the month of July.
There's a nice link to the fortunes of QBE, which ends the week with a bang. Up about 0.9%, so a nice outperform. Its position ahead of the Fed's next decision, how critical is it?
Well, QBE, just a couple of days ago, it bounced off key levels of technical support. We see if we look at the 3-year trading range, there's quite a bit of technical support around $10. But QBE, I know we know it's had its problems in 2011, 2012 with those billion-dollar insurance events, but it essentially is a global macro interest rate play, because we know that they receive their premiums, but in order to be profitable they have to invest those premiums, and if interest rates are higher they get that helps their investments, and if interest rates are higher it also increases the discount on their liabilities, which is of benefit to them as well. And we only have to look at history. As interest rates have rose and equity markets have done well, QBE has done well on the back of that, e.g. pre-GFC. But after the GFC, as stimulus came in to support the US economy and Europe's deflation problem, interest rates have pulled back, and so have QBE's profits in the process. Now, the QBE really did underperform in June, and we saw a lot of that post the employment data on the 3rd of June, when we had that significant miss in US employment data. Interest rate hike expectations significantly decreased. Yeah. So that had a massive impact on QBE's outlook. Now, on top of that, as we led into the Brexit referendum, we saw the problems that had on the market, and Janet Yellen came out and said, we're going to take that market turmoil into account when we're looking at our interest rate outlook. So as the referendum happened, it just reduced the chances of an interest rate hike in America even further, and that again hurt QBE. So we saw significant underperformance of about 20% just over the last month, and their outlook very, very closely depends on tonight's result.
So just to round out last month, Deutsche cut the price target to 12.80 from 13.70, but actually has a buy on the stock, and Morningstar as well shaves it from $15 to 14, but an accumulate. So there we have it. Anthony, thank you so much and have a great weekend.
Thank you, you too.
Anthony DePaul there from Atlantic Pacific Securities, live in our Sydney CBD studio.